Great. So, welcome everyone to this TradersLab webinar. Matt worked very hard to kind of reshape the home page. So it was good. It was okay. But I was not using it much, and probably the same thing for a lot of people. So we had this idea to integrate better the stuff that we use, and it was also a good opportunity to change some things and introduce a new way um, to show and to use those breadth metrics. Oh yeah, we'll share the screen. Good points. Um, Great. So you should see better with this one. All right. So if you go into the TradersLab app or website, whatever you how you use it, um, you get the market overview page, and that's the new one that will focus the webinar to today. So this is the same spirit as the whole app, right? So we want to make sure to represent kind of the top-down market approach where we start with the market first and then you go down to the sectors, to the groups, and then finally to the stocks. So really try to build the market overview dashboard the same way. So starting with the market, and going down into the chain where we finish with the individual stocks as well. So, uh, first thing, as everywhere in the app, you can have the search bar, so you can search stocks. You also have the market news that was kind of just reallocated at the bottom of the page, so you can open that small menu, and then you will have your news for the day. And then it's really about the dashboard. So first we start with market breadth and internal. So you will recognize those tiles where we have one tile per market. So you have the NASDAQ, the S&P 500, NYSE, and IWM, so small caps. And for each, you have the TLMM signal, trend signal. So currently NASDAQ in uptrend attempt. You also have the GDB reading, so the global daily breadth reading. So you can go into the documentation if you don't know exactly what it is. And it will explain that it's a composite score based on price, momentum, and breadth. So it gives on a specific day a score, uh, how strong or how weak the action is. You also have the return of each market and the median return as well. So you have that for each, and if you click on one tile, oh, we'll have to fix that. At least we're trying to fix this one, but it's not fixed yet. Sorry for that. So if you go into one tile, you should go right away into your TLMM dashboard where you have more information and the classic view that you know well. Then something new that we added is the internals. So that's something that I use in the Prime report, and it was asked to be integrated as well. So you have the credit spreads, the VIX, and the Bitcoin. So this is kind of the three main internals that I'm tracking to assess if a market is more in a risk on or risk off type of regime. So if you over the tile, then you will have that mini chart, and otherwise you have small signals based on where the price is to the daily structure. So Is the price above or below the daily structure, and is the daily structure rising or declining? So that's this bearish or improving or bullish signal that you get for each of those internals. So you have the 21 DMA, you have the is it rising or declining, and you have the trend velocity as well for each of one. Uh, then third is also a new addition where we have very high level kind of feedback for the internals and the breadth as well. So market sentiment simply it concatenate what's the word in English? It takes all the markets that we're tracking, basically taking the Nasdaq, RSP, NYSE, IWM. So that's the whole database, and gives you a quick snapshot of how much advancers and decliners there is, how much new highs and new lows, um, the stocks above their 200-day moving average, so a bit more long-term health of the market. Momentum, so current GDP rating aggregated for all the markets, and the sector strength as well. So how many positive and negatives sectors there is on the current day. So it's really there to quickly assess kind of the market high level, and yeah, just give you a rough idea. Then we're getting into the more specific stuff. And the first one is the global daily breadth, so GDB. It's kind of a small dashboard to show you how all the markets are doing on the day. So on average, all markets are down 36 on the day. And then you have it for the Qs, RSP, NYSE, and IWM, so the four market that we're tracking. You have your legion right here. So once again, above 80, it's normally considered a bread crust or a follow-through day. And below minus 80 is kind of a distribution day. So that's kind of the two extremes. And in between, you have weak market and strong market to some extent. You have on the right the intraday GDB. So it's tracking intraday in real time how the market breadth, price breadth, and momentum is tracking. So you see at the open we had a pretty strong fade, and then we're basically in a downtrend all day with small rips, small bounces that are faded as well. So it just gives you an idea of how the market is tracking intraday. Advance and decline, so pretty usual stuff. It's bringing back what we use in the TLMM dashboard and simply putting it in a different view where you can see the different market. So for Nasdaq, for example, we have 50 advancers and 51 decliners today, so minus 1%. You have that for the four markets, and you also have the information for all sectors. So you also have the market average, just to give you a rough idea, high level as well. Then comes the net new highs and lows. So we continue in the very kind of typical and classic breadth indicators. You can select the market that you want to see. For Nasdaq, for example, now you have the cumulative chart with the 50 DMA, and you have down low right here, you have the net new highs and low for each day as a bar chart. You can also select your market with the tiles, and you have each sector's net new highs and low as well, and quickly seeing the green versus red, the bar to quickly let you assess the health of each sector and each market as well. All right, and now comes kind of the crunch part and the new things that we're adding to this dashboard. And the McClellan analysis is not new. We have that in the TLMM dashboard as well. Let me just show you what we have right now. So that's what we have right now, right? So we have the McClellan oscillator down low, and you have the summation at the top of the dashboard. And the problem is um, this summation and the oscillator kind of goes between extremes without much reference as to what is an extreme. Sometimes we go to 8, sometimes we go to 5, and same problem to the downside as well. Um, and same problem is there for the summation as well. We don't really see or know what an extreme is and what are the actionable levels. So what we introduce uh, right now is the McClellan analysis, so the summation and the oscillator being normalized. So what normalization means is simply that we put all the data on the same level, on the same reference. We do that with a z-score normalization. So basically what it tells you is how many standard deviation the current data is above the average that we track over the last few years down to 2022. So from 2022 down to today, what is the average of those data? And then the z-score tells us how many standard deviation we are above or below that historical average. And what it does is gives you clear signal as where we are historically compared to that average. And now it gives us way cleaner levels to work and to build our system from. So large spike to 2 standard deviation above is kind of an extreme overbought condition. You have the +1 standard deviation, which is kind of the um, overbought, not extreme, but overbought kind of potential reversal points to the upside. And we have the same thing to the downside where -1 standard deviation and 2 standard deviation as more of an extreme um, level to play against. So obviously that's how I use. I'm pretty contrarian with the way I use my McClellan summation and oscillator as well. So when I see the summation being 1 to 2 standard deviation below the average, then I know that this market has a lot more upside and space to run. And that, for me, that's a buy opportunity. But you can decide your rules differently, trade it differently. That's all up to you. But for me, that's how I use it. The oscillator also gives a very good opportunity to position early in a trend on a reversal. Uh, Same using the z-scores or the normalization of the oscillator. So when you see that McClellan oscillator hitting 2 standard deviation, that's usually a pretty strong spot in the market where you don't buy everything. That's not what I do. But you start to look for constructive action. You start to look for setups around the 21 DMA structure and start to slowly build your exposure and build your traction as we gain information and the market proves itself. Down below, you have kind of the rough data for the McClellan summation and oscillator as well. So you have the z-score for each market. You have the 1 day change and the trend as well. And we added a small signal. So base if the McClellan summation is negative or positive, if there's this is in an uptrend or downtrend, then you will see bearish, improving, weakening, and bullish signals. If you don't like the normalization, or if you want to see in a different view, you can simply go into standard, and then you will have the S&P 500, NASDAQ, NYSE, Russell 2000. And also, if you want to see a specific market, you have that drop down menu right here. So if you want to focus on the NASDAQ, then you go into the NASDAQ, and that's the only market that you'll see. And we added as well the 10-day moving average. That's what we already have in the TLMM dashboard, but we added that for a single market as well. So do you have questions, guys? Maybe I'll wait just 2-3 minutes if you have questions. So there's one. For what do I use NYSE? So NYSE is good to have a good idea of the broad market. That's a very large basket. There's mega caps down to very crappy stocks. So you have a good feel as to what the broad market is doing when you track NYSE. That's not something that I use, but I know that some people use it. And again, TradersLab is not only for me, but we're trying to have markets and tools for everyone. Just going to wait a bit. Seems that some people are typing. All right, for NASDAQ 100 normalized MCSI, so summation. It peaked in May, but that was not the top. Yeah, that's a good question, Vic. That's what I'm talking a lot in prime trading, but maybe you didn't hear me about it. So for me, the downside is way more actionable than the upside, right? So that's how market works. So you have, and usually reversal to the downside are like an event, but tops are not. And that's how usually market works. So I like to position on oversold readings, either on MCO, so the oscillator, and in conjecture as when the summation is also pretty oversold and to the downside. But what usually happens is when the market bottom, you get that bread trust, that big power in the market where momentum is really easy at the start of a market uptrend. And when that happens, usually every short term to kind of mid-term breadth indicators will start to be overbought pretty quickly. So just like you said, in May, and I talked about that in prime trading yesterday. Let me just refresh the page so they're aligned. All right, so right here, right? So market was in a correction, 2 leg down. We were pretty extended, almost 2 standard deviation below the average. And that's when the market bottomed, right? So there was a lot of chop right here in the last few days after the low was made. But still, that's really when market breadth started to expand. And like you noted, we were already at 1 standard deviation above the average, and we're just getting, so that was April 23. So just as we were trying to cross the 10 DMA, we were already at one standard deviation. And then we reached the peak on May 2nd, right here. So it was mid-run. And again, that's very typical of market and why I don't use kind of the overbought side to decide when to sell, when to over trim, because it's just not reliable. Market likes to run on fumes, start to get that big momentum trust, and then surf over it, and your position just go and trend without much momentum, but the trend keeps going. And then you start to get negative divergence when where the market get thinner and thinner, but if you're in the good stuff, uh, then you can have extended move, right? So you don't want to sell just because you are extended to the upside. So basically, I use the downside much more than the upside for that reason. So the sector breadth is really nice. Would it be good to watch those to understand where things are rotating? It's more for you not to add exposure. Yeah, we discussed that in the pre-market session, and I don't want to cover too much from the prime trading side, but um, there's a risk to play the rotations. And that's why personally I only trade the same basket of stocks, the leading ones, and I prefer to wait that they pull back, that they digest, that they base, that they form another entry, because I don't want to be caught in lagging sectors or lagging groups just because they have strength over a couple days or a week. And then you have a big portfolio which is lagging, and then you have to chase back the strength in the liquid leaders that are resetting up. So that's why I don't like to trade rotations. Uh, but it's still a good view to see where the strength is, and to assess the market health as well. So if you see that, I don't know, tech, communication services, cyclicals are very weak, they have net new lows, they are showing a lot more net decliners than advancers, and you see defensives, consumer staples leading, then that's a clear feedback as the market is not in a pure risk on type of market, right? So Pudel, but you consider overbought readings. I just don't want to go into my own trading, if you don't mind, guys, because that's the purpose of this webinar is really to cover the new homepage. But maybe we can discuss that in the Prime Trading Discord later if you're all good with that. Great, thank you. All right, so we discussed that one. So that's something that I really want to, and it's been a long time that I wanted to kind of normalize things with the indicators that I use. It should help a lot to kind of define better rules to engage, um, and especially the McClellan oscillator. That was one that I had a hard time to define a level to execute, but now it's much clearer. And those two standard deviation below average in 2025, there was one, two, three, four, five, and at one there was a lot. So if you only take the McClellan oscillator two standard deviation readings, um, along being in a good spot on the summation, then you really put yourself, and that's kind of the same as using the breadth extensions, right? But I like the idea of having all my process and my rules around one tool. And for me, the McClellan is really reliable. So I like the fact that I might even only focus on the McClellan oscillator and not on breadth extensions anymore. Uh, Simply because breadth extension is kind of hard to know uh, when this is reliable. Is now the market extended because the stocks above their 5 DMA or 10 DMA oversold? Is it actionable, or the market need to flush even more? And we need to see the stocks above the 21 or the 50 being oversold. So it's always hard to build rules because there's different time frame of breadth extensions, and using the McClellan oscillator being normalized really simplify the process. It's not perfect. Nothing is perfect, but at least you have clear rules and a clear process. All right, so talking of breadth extension, if that's something that you use, we also have the standard version. So same thing as in the TLMM dashboard. So you can select the market, so NASDAQ 100, S&P, Russell, and NYSE. And surprise, we also have them being normalized. So you have the Z-score for the stocks above their 5, their 10, their 21, 50, and 200 daily moving average, and for each market as well. So quickly you can get that heat map and just assess the health of the market based on how much stocks are above or below their moving averages. So pretty neat way to use this. So you can see that NYSE is pretty weak right now. We have negative Z-score across the board, and even on the midterm, we are even retesting -1 standard deviation below the average. So clear way to spot where the strength is. Is it in the tech? Is it in the broader market? Is it in small caps, etc., etc.? Just using the heat map of those breadth extensions. All right, next one, sectors and returns. So that's a kind of a new view, but something that we already had. So we had it the box graph view. So this is a statistical distribution for each of the sectors, with the bar extremes being kind of the outliers, the biggest movers, and then the box is kind of an I'm not fully aware exactly how yet to fully use it, but it's kind of the median price, and then you have half of the median movers at the extreme of the box. I'm in the process of building the documentation about that, but I know that's something that we were using a lot in engineering. So we had the option to use that view. So we'll learn to use it, and it will be explained in the documentation as well. And you can select again what market you want to see. So obviously, if you go into NYSE, then you have a much larger basket of stocks, and the S&P 500 as well are being super focused with the Nasdaq. You also have the returns. So this is basically a line chart of the intraday returns of the different markets. It's not the GDB, it's simply the price chart. So it's different than this one right here. And last one. So that was a good request. I know a lot of you asked for it, and happy that we were able to integrate that. So this is basically my scans. Uh, the two ones that I use, right? So the first one is the liquid leaders, uh, and there's more to it, but we capped it to this number of stocks. But this is kind of the leading names, liquid leaders of my scan. And then if you go into setting up, what you'll find is the daily structure pullback scan within a table view. So you can clearly and quickly assess what is setting up in the liquid leaders. And if you you get that mini chart view. So you can go name by name and just review them, or you can go into chart mode and then you get your mini charts to quickly assess the stuff setting up into the liquid leaders universe. So really like this one. Personally started to using this one this week, and so far so good. That's a quick way to just access the setting up stocks. Yeah, that's a nice one, right? So very fast to just scroll down the names and you get a pretty good feel of how things are shaping up. And even for the liquid leaders itself, even if it's not setting up, if you go through this list and you see stuff like Palantir breaking down daily structure, Robinhood breaking daily structure, and you see these red flags all around, then it gives good feedback and good information in a pretty quick and easy way. Yeah, and just remember, if you want to see all the names, you can go into the liquid leader scan and you have the same mini chart view, so you can scroll the market pretty quickly. And you can do that with every screen that you build, obviously. So the question is, when will you add the Trump Tweetopedia to TLab? So, yeah, we're thinking about making alerts, tracking Trump, X account, Truth account. Um, no, I'm just kidding. But yeah, nobody can outperform the Trump's tweet this year. That's pretty crazy, right? We're living in a news-driven or Twitter-driven market. All right, so I think it's all that I had for the new homepage. So we discussed all the dashboards down to the stocks. So there's nothing too crazy. That's not reinventing the wheels, but I think that's a really really nice place to really just track the stuff that you want and that you use in a single page format that you can scroll down, quickly assess the stuff, the market, and then if what you see in the market is actionable and you like what you see, then you have your liquid leaders and setting up stock. So that's a nice way to just build a format in a good workflow. Yeah, exactly, Pat. So good point. So setting up is the daily structure pullback scan. So liquid leaders daily structure pullback. That's this scan. So that's really kind of setups around the 21 DMA structures. Uh, Sometimes above, sometimes below for a reclaim, but really price action around that daily structure. Yeah, that. So the question is, how will, when will the RG chart is coming back? Yeah, I don't want to go into much details. You know, we had some issues, copyright issues. Now we have to work with them to integrate the RG chart. But it's not easy. I will just say this. So we wanted to make that new home page, and now we'll see if we can bring back RG. But let's say that yeah, what we have to work with is pretty old school. So yeah, we'll see if we can do it. All right, guys. So other questions? We'll try to fix that as well. All right. So, guys, I hope you enjoyed. If you have any more questions about that homepage, don't hesitate. This Discord is free. You can use the product feedback or request section. If you have other, did you see my question earlier? No, I did not. Did I miss a question? Oh, okay. Have you thought about adding a portfolio tracker to TLab? Um, yes and no. That's quite a big feature. Yeah, maybe down the road. But just something to consider is Matt is doing this on the side. At nights, on weekends, we don't have a team to work with us. We run things pretty lean, so we're just not able to do everything that we want or every ideas and suggestion that uh, even if they are very good, we just can't do everything. That's our reality. So doing kind of the journal is a big project, and we felt that there's so much already good options on the market. So we didn't want to go and compete, but maybe down the road, if we um, can grow the platform and have enough resources to get some help, then maybe down the road. But for now, this is not in the plan. So discern follower, when will the documentation be updated? So I'm working on it. At least you will have that webinar being recorded. But yeah, documentation is on the way. So in the next few days. Thank you, W4. Appreciate the good work, good words. Yeah, like I said, that's a very good suggestion, and keep them coming. Don't worry, everything you suggest, we're using a program to log everything and prioritize, and we do use a lot of suggestions that you guys make. So don't stop making them, please. Um, But yeah, just don't expect the same output as a deep view, for example, when they are like 50 person working on the project. When on our side, we're kind of alone and, and working as a side project. More caffeine for Matt. Yeah. He's already very productive without caffeine. So, yeah, but he's working very hard. And you have to know that Matt is already working full time, uh, pretty high level, uh, and also a family guy. So, yeah, we discussed, and this is not a sprint, this is a marathon. We don't want to burn ourselves as well. So yeah, we keep a good product. We do some good updates along the way as well, but we just have to accept that we cannot do everything as quickly as we would want. Yeah, no, we can't. So Acer, bundle package for Discord and TradersLab. So TradersLab and Prime Trading are two different things. So at least I think you understood that TradersLab, I'm not alone. Matt is a partner into this. And Prime Trading is a different business, so we cannot merge the paying process for the two different companies. All right, guys. So I hope you enjoyed this webinar. Now we can go back to see the market bleeding out. So if you have questions, again, don't hesitate. Otherwise, let's talk again for the next improvement and next features that that we release. Have a good day, everyone. Cheers. Bye bye.